Happy Monday. I hope you're doing well today. I hope you had a great weekend. Today is Monday, November 22nd, 2021. It is Thanksgiving week, and this is your Monday market update video. This week will probably be a little slower due to the Thanksgiving holiday, but after the year we've had, I think we can all use a slow couple of weeks. Now, the sad part is, I think we said that Thanksgiving last year. So, well, let's jump in. Let's recap what last week was all about, and let's see what couple things that we'll see this week, and we'll go from there. Monday started off with some follow-through momentum from the previous Friday, some economic news that continues to show that the economy is still in growth mode. There's some slowing in the longer-term outlook. We're starting to see that. Future orders, but overall, strong economic activity and continued inflation pressures. We did get some comments from the Bank of England and the European Central Bank hinting at higher rates, but that put bond yields on the way up. That as that happened, stocks pulled back, and S&P 500 closed pretty much flat for the day. Tuesday was back off to the races again. Retail sales data, I told you about that last week. The consumers remained very strong. October was another strong month for the consumer and retail sales. We also got a few important earnings reports, Walmart and Home Depot, there were some additional Fed speak as well, and then the S&P 500 closed up about 1/3 for the day. Roller coaster continued on Wednesday as the markets opened lower on more inflation concerns, then moved sideways most of the day. S&P 500 gave back most of what it picked up on Tuesday, closed about 1/4% lower on the day. There was some economic news in the United Kingdom, hot inflation numbers, and Target issued some cautious comments about inflation and margins. Thursday was another recovery day. Nvidia earnings and comments that made us a little less concerned about the chip shortage over the coming months and years, as well as some strong economic data, including jobless numbers that continue to stay low. The evidence is the economy is still healthy and growing, but it's not growing too much to push the Fed to accelerate their tapering. So Friday came in, opened with little change, then it sold off as news from Austria's COVID lockdown hit the tape. The fear was, how is this going to spread across Europe? And some of that was calmed later in the day when Germany came out and said that they did not currently have lockdown plans. The S&P 500 was down 0.14% for the day. The S&P did manage another positive week, up about 1/3% for the week. There are a few items we'll be watching in the coming weeks. So, rising COVID cases. Again, as I mentioned, this should not be news to anyone, nor should it surprise us, right? As I mentioned, we're seeing some Central European countries either go into full lockdown or some variation of that. We're also seeing the highest rate of infection since the pandemic started in some places like Germany. Now, as a market, we need to focus on a couple of things. The fact that we have vaccines. Now, boosters even have more approvals. Antivirals are coming out as well. Merck's was approved in the United Kingdom last week, and even widely available rapid tests. So as you've heard me say this before, if I can test for it and I'm not going to die from it, that means then I believe that the U.S. is not going to see more lockdowns. It means that reopening may see some delays, but it's not going to be, it's still going to happen. We are going to get back to this reopening. So COVID is the first potential source of volatility in the coming weeks. We'll also be watching Washington, and not the most recent bill, but do you remember that pesky debt ceiling? Yes, the one that they kicked down the road a couple of weeks ago. Well, that comes back into play in the middle of December at the latest. So I don't think that either of these issues are going to cause long-term problems, but near-term volatility may bring some opportunities, so we'll keep an eye on that for us. We will get some important economic data this week. It'll come on Wednesday, not on Thursday. Usually it'll be pushed forward because of the holiday. Jobless claims will report on Wednesday. And then the most important one, the core Pce Price Index. Remember, this is the favorite the Fed watches for inflation. Over the weekend, Wharton economics professor and author Jeremy Siegel said that we are only one inflation report away from a correction. Not sure I agree with that, but it is. This information is important. These are important reports. Now, no one may be around to hear this because it'll be the day before Thanksgiving, but they are very, very important. So for the holiday shortened week ahead, I'll leave it at that. More on Friday with some planning ideas, then back on Monday with some more market updates. Let me just take a moment to thank you and express my sincere gratitude to you as we come to Thanksgiving. I'm very blessed to work with you, your families and your families and your friends to help you reach your goals. So I can think of no better calling for me, and I really appreciate the trust that you place in me. I don't take it lightly. Have a great weekend and enjoy your Thanksgiving holiday.